reality is, I truly believe in the thesis that we are emerging into the stagflationary environment that we saw, very similar to the 70s. And what are the asset classes that emerged from that period of time? Well, it was commodities. And I am absolutely convinced that gold is one of those commodities that are going to be coming out of this. But you have to look at other thematics that we're seeing. And here I was presenting at the TD conference last week. I was at the CIBC institutional conference the week before that. The thematics is undeniable. Critical metals is where the world is going through right now. To get to that 1.5 degree aspirational goal by 2050, you need $1.2 trillion spent within the critical metal space. And within that $1.2 trillion, $750 billion need to be spent for copper assets like ours. So this is something that's just going to be undeniable. Cost inflation is a real thing. And so as a result of investment decisions, you really need to focus on places that actually have good infrastructure, good support, good access to power, good access to water. So with all these virtues in place right now, Northisle Copper and Gold is undeniably going to be the opportunity for the future, and very happy to present here at VRIC on this. So I will be making forward-looking statements throughout this presentation. I refer you to the disclaimer explaining the nature of these statements. So Northisle is underpinned by a very robust preliminary economic assessment. The economic assessment yields approximately $1 billion project, NPV 8, at $3.25 copper, $16.50 gold. It yields approximately a 20% IRR after tax over a 22-year life of mine, 100 million pounds of copper production a year, and 100,000 ounces of recoverable gold production a year for those 20 years. So in all respects, this is a significant material copper project, medium capital intensity copper project with a massive gold byproduct. So the asset is in BC, which is obviously a prolific mining jurisdiction. It's second to none in terms of ESG low-risk standards. And there is political will today to once again be the world's epicenter for sustainable mining as it relates to critical metals, which is why you're seeing the majors coming into the province, investors, and other countries referring to our permitting structure as being the beacon for how things will move forward in their countries. The company was founded by Dale Corman, who's probably best known for Peñasquito selling it to Goldcorp for $1.2 billion, which is probably one of Newmont's more prolific assets today. Dale actually just got inducted to the Canadian Hall of Fame, so his leadership has been absolutely critical. And 100% of our exploration land package essentially covers a 50-kilometer vast porphyry district that initiates from the BHP Island Copper historical mine that was in production for 22 years, which yields incredible infrastructure second to none. So I just want to touch on how important the ESG risk is in assessing projects. The answer among strategics and investors growingly is it is increasingly more important. Canada is one of the very few countries that are low-risk jurisdictions, according to Wood Mackenzie, as part of this map. Yes, demand will force investment in a higher risk jurisdiction. However, low-risk jurisdictions will play a critical role in diversifying this risk as it relates to opportunities moving forward. Canada came out with their critical metals strategy in December, and they define it as a generational opportunity that's going to define Canada as being the leader in supplying the world with these essential metals. So the objective for Canada is to grow capacity, to expedite permitting, to support development, and to finance projects going forward and fund projects going forward. So approximately $4 billion has been earmarked from the 2022 budget last year. Approximately $2 billion of that is going to be used for infrastructure build, and $2 billion that is going to help support projects like ours. The feds will work very closely with the provincial government in identifying these types of projects, and our provincial government in BC has been publicly supportive of our approach regarding the North Island project. We have signed support agreements with Quetzino First Nations, which is a critical First Nation groups around providing consent prior to going after the permits, which has really ingratiated ourselves within the provincial government and why they've identified us as being one of the leaders in BC as it relates to First Nations reconciliation and critical metals advancement. So looking more broadly outside of BC, outside of the world, this is pretty much it in terms of copper development opportunities at our stage or even more beyond. And so clearly there is a scarcity of copper projects globally. If we were to spend $750 billion to develop copper projects, I can guarantee you there have not been that many projects even identified today, and a number of them will never get developed because they don't have the social license and the infrastructure that I've just described. So the questions that investors have to ask themselves when they look at these opportunities is how material are these projects relative to the development timeline? Are they too big? Will they be developed in the next 10 years? Are they too small? Do they even carry any material effect on the problem that needs to be solved? Other key questions are, is the infrastructure in place? Do you have ports? Do you have roads? Do you have to spend 10, 20 years to actually get permitted to build an access road? How much access to power? Is it clean power? Do you have a grid that supplies it? Do you have substations within a short vicinity? Do you have access to water? That has become one of the most critical questions today, is what are you going to do when water, which is arguably one of the most precious commodities in the world, isn't available for your project? How are you going to build a $5 billion desalination plant and keep your economics in check? And so I truly believe that Northisle, because of all these virtues, because we do have access to power, because we have paved roads that go into our property, we have 2 substations within a 10-kilometer distance of our property, we have arguably the closest deep-sea water port from continental America to Japan, which is where BHP sold its concentrate. We have one of BC's largest wind farms producing 99 megawatts hour, selling it, wheeling it into California for their blackouts. All these virtues are going to make and have made Northisle among the most attractive opportunities in this very, very short list of opportunities moving forward. So we do have a solid capital structure with very supportive cornerstone investors, including Michael Gentile, who owns approximately 9.9%, our chairman, Dale Corman, who owns a little over 11%. We have a very core group of high net worth investors, and management rounds it out with approximately 10% of the capital structure. We have a clean balance sheet, and we're funded for our 2023 exploration program with cash of approximately $7 million of the last quarter, which I can go through in a little bit more detail. So in terms of the project, the $1.1 billion Canadian NPV after tax 8 is predicated on a $3.25 copper price and a $16.50 gold price and a $10 moly price. The capex is approximately anticipated to be about 1.4 Canadian. The study was based on 2021 prices, so there has been inflationary effects since then. We estimate, just based on the 7 projects that have increased over the last couple of years, the cost inflation is about 25% as it relates to our project. During that period, copper is up 30%, gold's up 17%, molybdenum's up 300% to $30, and rhenium's up 20%. So clearly, this project is very positively leveraged to price increases, and margin expansion is inevitable. One of the greatest virtues for this project, from a mining perspective, is the strip ratio is one of the lowest in the industry, 0.7 to 1. It has a 22-year life of mine at 75,000 tons per day. So again, this is a intermediate capital intensity copper project with a massive gold byproduct. Recoveries are good, very strong on the copper side, and it produces a copper and moly concentrate, which is very clean, which appeals to the most discerning smelters and traders in the world, including the Japanese. And the cost per ton is only about $9.80 per ton, which again is remarkably low, based on the fact that we have access to very good infrastructure and labor in Canadian dollars. So for every 25-cent movement in copper prices from $3.25 moves the project NPV by approximately $300 million based on our PEA. So clearly, it doesn't take much to understand that we are in a $4.25 price environment, and moly prices have tripled. So this is going to have an exceeding leverage to increasing copper prices and commodity prices in general. So we've been very busy in 2022. We've signed agreements with Quetzino First Nations. We've identified gold and rich zones at Northwest Expo. We've built out our board. We financed the company $7 million for the first critical metals financing that was done last year at a 60% premium to back-end buyers. We drilled an extension of our high-grade zone towards west within our pit shell, and we've extended 200 meters below that pit shell as well. So there's lots of work that was done in 2021. Our exploration strategy is extremely exciting for 2023 and beyond. Our focus is to define a new zone just 3 kilometers from our project, which is approximately 40 to 50 million tons. Within the envelope, it's about 1 to 1.2 grams per ton of gold equivalent, which is about 3 to 4 times higher than our current resource estimate. That's something we can do. It's in our purview. And our second, which is probably even more exciting, we just announced our intention for Pemberton Hills, which is a massive buried gold, copper gold porphyry that exists just 7 kilometers away. This is a very exciting piece of the puzzle because if you think of the analogy around OT, Oyu-Tolgoi, in Mongolia, we have the starter pit, we have the open pit, we have something defined that's $1 billion project. The big question is starter pit to what? And that's what we're looking to define through Pemberton Hills in a very short period. Just to give a little bit of a finale on the catalyst. We will be looking to define the gold-rich zone within our porphyry. Again, the 40 to 50 million tons at about 1 to 1.2 grams per ton. That's looking to happen this year. We're looking to advance Pemberton Hills. We have 12 drill targets that are they're being considered. Once we get the permitting, we're either going to joint venture it out or drill it ourselves. We're advancing our metallurgy on the project in Northwest Expo towards prefeasibility study. And of course, we will continue with our First Nations relationships as this remains critical to our project. So thanks very much. This time is now for Northisle and the world as the world enters into the next super cycle.